The asset manager landscape has been very interesting in the last 6 months. We've seen a complete change in the styles that have really driven the market. In previous years, growth has been a big factor, which has really driven returns for asset managers, and particularly in the equity market. And what we've seen in the last 6 months is really a reversal of that. The big trend that has really taken grip on the market has been value. The value managers have outperformed, and it's been very pleasing because towards the end of last year, we at Investment Solutions thought that the trend in growth had probably gone too far. We were exposed to the value managers, and we've really seen an uptake in our relative returns this year because of that value bias. That's really been driven by resources, but by a number of other value factors in the market that have really come to the fore in these volatile and uncertain times. And as we see the volatility continuing, one of the big key questions we have is, will this value outperformance continue? When we're thinking about the equity market, a lot of what we're looking at is when we look towards the future, is a low return environment. And we think that returns will be probably very muted across asset classes, but equities being one of the bigger asset classes, we've been thinking about where the alternative options might sit for investors. And alternative investments has been a big theme in our portfolios, but is likely to get much bigger in the next 18 months to 2 years. When we talk about alternatives, it's hedge fund asset class, private equity, infrastructure, anything that's not really correlated to the traditional asset classes and the performance of those. Where we really have had a focus has been hedge funds, but we will be expanding out to the other asset classes over time.